Hey everyone, welcome back to Corporate Decoder, the place where we dive into company reports and break them down to understand what is really going on behind the numbers. And today we have Pacira BioSciences Incorporated, their 2025 annual report. And let me tell you, this filing is packed with numbers and some big moves, so buckle up because we are about to decode this beast. Alright, so Pacira BioSciences Incorporated is a company focused on non-opioid pain therapies, and based on this report, they're making some serious efforts to grow, especially with their key products, Exparel and Zilretta. Let's jump right into the moneymakers. Their total revenues in 2025 hit about $726 million. That is up 4% from 2024, which brought in around $701 million. That is a nice increase. But Exparel is still carrying the weight, making up 79% of their total revenue. That is a huge chunk, so any bumps in Exparel sales directly impact the whole company's Zilretta revenue, actually. Dipped slightly by 1%, while Iovera saw a modest 6% increase, so Exparel continues to be the main engine here. Interestingly, their cost of goods sold went down by 12% in 2025 compared to 24. This is great news because it means their gross margin improved significantly from 76 to 79%. This is partly due to lower inventory reserves and better Zilretta manufacturing costs, but it was slightly offset by some accelerated depreciation related to taking an old Exparel manufacturing line offline. Now onto research and development expenses. They spent about $117 million on R&D in 2025, up a significant 44% from 2024. That jump is mainly because of clinical trials for their new gene therapy candidate, PCRX-201, and also costs related to their new acquisition, GQ Biotherapeutics Incorporated, which they bought in February 2025. Their selling, general, and administrative expenses also saw a big jump of 25%, reaching $369 million in 2025 compared to $294 million in 2024. This is because they are investing more in marketing and sales to boost their products. And there is also an increase in legal fees, possibly related to ongoing patent matters, so they are spending more to sell and to defend their products. Now, for a really interesting number in 2024, Pacira took a massive $163 million hit for goodwill impairment. This happened because of a generic competitor entering the market and a patent ruling that did not go their way. This led to a significant drop in their stock price, which then forced them to write down the value of that goodwill. It shows how sensitive their market is to competition and legal outcome. In 2025, Pacira recorded a legal judgment of about $23 million as income. This was a win for them against the Research Development Foundation. Regarding Exparel royalties, they are still in an appeal process, though they also had a $7 million legal settlement related to the Evenuse antifilers, and a $26 million impairment for some Zilretta research and development due to revised timelines. This whole section is a bit of a roller coaster with highs and lows, tied to legal wins and strategic shifts. Looking at their other income and expenses overall, they had an expense of about $2.3 million in 2025 compared to income of $10.3 million in 2024. This change is mainly due to the legal judgment and interest on it in 2025, but interest income was lower because they paid off some debt and had less cash on hand after stock buybacks and debt payments. Their income tax expense was almost $10 million in 2025. This is a big drop from about $36 million in 2024. The reason for this huge difference is that in 2024 they had that big goodwill impairment, which is not tax deductible. So it actually created a deferred tax asset which showed up as a tax expense on paper this year. With a profit, they are actually paying taxes. Let's check out their cash situation as of the 31st of December 2025. They had about $238 million in cash and investments. This is down from about $484 million at the end of 2024. This decrease is largely due to paying off their 2025 convertible notes and paying down their revolving credit facility. For operating activities, they generated about $152 million in cash in 2025. This is slightly less than the $189 million generated in 2024. The decrease is due to higher operating expenses from R&D investments and building up inventory, but they did get a nice boost from that legal judgment we talked about. In investing activities, they had a positive cash flow of about $99 million in 2025. This is mainly because they sold off some investments. They also spent about $17 million on the GQ Bio acquisition and another $15 million on manufacturing equipment. Financing activities show a big cash outflow of about $370 million in 2025. This is mostly because they paid off their 2025 convertible notes, which was over $202 million, and also paid down a term loan. They repurchased a lot of their own stock, totaling over $148 million. million. So they are actively managing their debt and returning capital to shareholders. Speaking of stock buybacks in the last quarter of 2025, they repurchased over 2 million shares. They have a large repurchase program authorized, indicating management believes the stock is undervalued. On the debt front, they entered into a new revolving credit facility for $300 million in July 2025. This facility replaced their old term loan and provides them with working capital, so they've restructured their debt to have more flexibility. They still have about $287 million outstanding in their 2029 convertible notes. These notes are a key part of their long-term debt structure and will eventually need to be addressed. This is an interesting one. They have contingent consideration from the Flexion acquisition, which could be up to $372 million. If certain milestones are met, they actually recorded a gain on this in 2025. Because they adjusted their estimates for achieving these milestones, it means they might be less likely to hit them, or they are more likely to hit them at a lower cost. Now, importantly, their accumulated deficit is still negative at about $199 million. This means over their history, they have spent more than they have earned historically. They did make a profit in 2025 of $7 million, which is great, but it follows a pretty significant loss of $100 million in 2024. That massive loss was largely due to that goodwill impairment we discussed earlier. The risk section is always a crucial part of these filings. They highlight their dependence on Exparel and Zilretta, their struggles with Third. Party payer coverage, the competition they face, and regulatory hurdles. This is standard for pharma, but they also mention the risk of failure in clinical trials for PCRX-201, their promising gene therapy candidate. And of course, patent protection is a big concern with multiple ongoing litigations. Finally, on the stock performance side, they openly admit their stock price is volatile and has seen massive swings. This is a typical characteristic of biotech companies driven by trial results, regulatory news, and market sentiment. So it makes sense that they are wary of paying dividends and are focused on reinvesting earnings back into the business. So what is the takeaway here, Pasi? BioSciences Incorporated is in a transitional phase. They have a strong core product in Exparel, but are heavily reliant on it. They made some strategic moves with acquisitions and debt restructuring to set themselves up for future growth. The increased R&D spending and sales investments are positive signs, but the company is still facing significant risks from competition, patent challenges, and the inherent uncertainty of drug development. The fact that they are still in an accumulated deficit position, despite being a public company for years, is something to keep an eye on. It shows the long road and high investment required to succeed in this industry. But hey, that is just my decode of this filing. What are your thoughts on Pacira BioSciences? Naked numbers and their strategy, do you see them continuing to grow, or are the risks too high? Let me know your take in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community, linked in the description below for even more discussions. This is Corporate Decoder signing off. See you next time.